Disadvantages of investing in tax sale foreclosures. Hi, my name is Julia M. Spencer. I'm your #1 source for real estate advice online. Thank you for checking out my video. Also check out all my other YouTube videos on all kinds of real estate topics. Leave me comments right here below this video. Make sure you go to my website and subscribe to my newsletter. I also have a radio show. You can check up on all of that. Also, my shows are actually archived. You can check them out at wruu.org. Also, send me questions and I'll address them either in the show or in future videos. I would look forward to hear from you. Let's talk about some of the disadvantages of tax sale foreclosure investing. Now, if you watched my videos before and you've read my ebooks or listened to my ebooks actually, and know anything about me, that's one of my big things that I'm into is tax sale foreclosure investing. I love that because I got into it when I had little to almost no money, and I was able to get a bunch of really good properties for very, very cheap. I made them rentals, and that's kind of like the reason why I have successfully retired in my early, or actually late 30s. I'm 40, in my 40s now. So, and you can do that too. Anybody can do this. Get a couple of extra properties on the side, or start investing in real estate, and tax sale foreclosures is the easiest way to get into if you have little to no money, bad credit, and all those things. So you hear all these videos and you watch all these videos, hopefully from other investors as well, on the advantages and disadvantages of tax sale foreclosure investing. Let me just give you one main example of tax sale foreclosure investing that's kind of bad. Not really bad still in the grand scheme of things, but one of the things that you need to watch out for if you invest in tax sale foreclosures, and this is something that I learned the hard way a couple years ago, but this is something that I also need to watch out for. So as real estate investors, we're actually kind of doing this balancing act of not just making money, but also trying to keep as much money as we can. Some years I'm pretty successful at that because I have a lot of deductions, and some years I'm not that successful because obviously my income exceeds my deductions, and you pay taxes on that difference, that delta of income minus expenses. So this year I'm not going to be so lucky, and I'm going to have to pay a bunch of taxes, which is a good thing in the way that I made a lot of money, but the bad thing is I got to dish out some of it to Uncle Sam and the IRS, which is expected. And let me just tell you what happened this year on my tax return. So I have a property right here in Savannah, Georgia. I purchased a couple of years ago, actually pretty close to 3 years ago now, at a tax sale foreclosure. Got it for super cheap, nobody bid against me. Property was in really bad shape, needed a lot of repairs, not a lot of remodeling, but it was in a great area, and I knew it had a lot of potential, and I was right. So I ended up keeping this property and putting some money into it. I remodeled it little by little. I didn't take up any loans or anything like that to remodel it. I just kind of did it with excess income from my vacation rental. And this is like the first year where we are actually showing kind of really done with it. So more money put into it right now doesn't really yield more value to the home. It's just going to make it nicer and improve it a little bit. So so the disadvantage, obviously, and you hear me preach this before, the 5 great things about investing in real estate and why people invest in real estate is because you can just make money on so many different levels. And of course, I always talk about depreciation expenses that you can take. You can appreciation of the property, because the property will be worth more in the future than it is now, hopefully, if you bought in a good area. Amortization of your loan, which means that eventually tenants will pay off your loan if you have one on the property. Also diversification, because if you have a portfolio of stocks and mutual funds, or whatever else you're investing in, real estate is a good thing to add. It's a very stable asset that doesn't fluctuate too much, depending on the area, of course. And of course, cash flow. Cash flow is the big thing, of course, especially if your income from rents is higher than what your expenses are. So with this particular property that I just mentioned, is my little I call it my my black sheep of the few, because it's my fixer-upper house. I've gotten rid of all my other fixer-upper houses because I can only fixer up one of them at a time. I don't have the capacity or the patience or knowledge to do fixer, and actually probably the most important is I don't have any patience for that, and it takes me too long. So I don't keep a lot of fixer-uppers, but this one is my fixer-upper house. And so basically I've been keeping it for the last 3 years and fixed it up enough that I can rent it. And now everything that I get from this property is straight up cash flow, because I have no mortgage and I have no interest expenses as a result. And so here's the bad thing about tax sale foreclosures. If you want to get into tax sale foreclosures, two of the major expenses that you have if you purchase the property with a loan is your depreciation expense and also your interest expense. So if you have a loan on a property that you purchase for investment, you can deduct those off your taxes. Those are significant expenses that will definitely lower your taxable income, which means you have to pay less taxes, but they don't apply to tax sale foreclosures, and this is kind of the thing. So if you get a lot of tax sale foreclosure properties, just keep that in mind, that they will get you straight cash flow and you can run around with that money and do with it whatever you want. But if you have no mortgage on it, you didn't get any financing, then you can't take the interest expense. And also, if you haven't paid much for it, as in my case, I paid $1,400 for the property, divide that by 27.5 years, I think it is, to depreciate a property, that's nearly nothing. So depreciation and interest expenses I cannot deduct on this property. And if I had my entire portfolio set up with tax sale foreclosures, I couldn't get any depreciation expenses and any kind of interest expenses on any of them, which kind of increases my taxable income because I'm still making money with them. I hope you're following me. But it's pretty bad because that doesn't help me a lot. So what you need to do as a real estate investor, you need to always strive to get that balance of properties that you financed, properties that you own outright, and anything and everything in between, like properties that you maybe finance partially. So what I'm gonna have to do with this particular property is I'm gonna have to see if I can get a mortgage on it. That's my solution. That will help me at least to get the interest expense. It also pulls the equity out of the property, and I can use that equity to buy more tax sale foreclosures or purchase another home. Go to my website, juliamspencer.com. I've published a number of ebooks there, 2 of them specifically, and how to make money with tax sale foreclosures. Those are going to be your best bet to understand how that whole tax process works. And just keep in mind, it's not always about how much money you make, but how much of that money do you get to keep. And in fact, that applies for any business that you're in. If you won the lottery, for example, and gotten a huge inheritance or any other kind of sudden cash flow, always think of the IRS. The IRS wants to have a part of it. So you need to not only get smart about how to make money, you also need to get smart about how to keep the money and how to balance the two to a level that you can afford. So with that, don't forget to subscribe, juliamspencer.com. Check out my radio show. The archives of my radio show are at wruu.org. I'm also going to post them on my YouTube channel, so subscribe to the YouTube channel too. And send me questions. I look forward to hear from you. Have a great day.
For your free guide to real estate investing, visit juliamspencer.com.